trading is not an ATM machine. Hi, it's Charlie giving you Wednesday's video. So, a lot of people that get into trading, myself when I started trading, you think, well, I'll learn this trading malarkey and I'll create an income. And you hear lots of people talking about creating an income from trading. The problem with using that sort of language is that trading is quite unique in that it's not a job. It doesn't pay £10 an hour or £100 an hour. It's erratic. The returns that you can make from trading can be outstanding, but it's not a regular income, and therefore you can't treat trading like an ATM machine. If you try and treat it like that and think, oh, it's just a place where I just turn up, go and start trading, and I'll just, pull cash out of the market, then you're deluding yourself. Now, of course, as traders, we can go through phases where it feels very much like that, where you just have rich periods where, almost trade after trade or week after week you are making money, but there's always going to be those periods where you're not, and there's going to be periods where you lose money. And so therefore we can't treat it as an ATM machine. If you have that sort of mindset towards it, what's going to happen when you do have those inevitable drawdown periods within your trading? Because everyone has it. Doesn't matter how good you are at trading, doesn't matter whoever they are, there's going to be drawdown periods in your trading. So if you think of it like an ATM machine, you're setting yourself up for things like disappointment, for depression even, or moderate depression, because if you get elated at thinking that it's a money-making cash cow, then when you do have some losses, you're going to really struggle with that, and that's then going to affect you going forwards. It means that you're more likely to hesitate going forwards with regards to taking new trades. It means that you're more likely to then start banking profits early because you're scared, because you've been in a drawdown period or a period where you've not made money or lost some money. And so it can affect you in so many different ways. So what we want as traders is to have a mind or an emotional plane as level as we can. It will not be perfectly level. We are not robots. But if we can try to have a stunted emotional range towards the markets, then that puts us in a much, much better place to trade. If we get excited, if you allow yourself to get excited at the winners, what's likely going to happen when you have losers? You're much more likely to be depressed or down when you have losers. I've seen people do that time and time again. And again, when you're out there, when you see, I've been seeing stuff on social media lately where, you're seeing youngsters really, and I don't suppose they're even real trading, but getting excited about winning trades, and that's not the reality of trading. You do not get excited about winning trades, because if you're getting excited about winners, it means you must be getting depressed or despondent when you have losers. And if you get depressed and despondent, it means you won't be able to trade very well. So the reality is, anyone you see getting excited when they have winners is really not a great trader, because that means that they won't be dealing with the losing phases when they come along very well, and that means that'll upset them. So it's all nonsense. Don't listen to the excitement stuff. Trading, as much as possible, keep it boring, keep it emotionless as possible. You do that by trading within certain risk parameters, and you do it also by not allowing yourself to get excited and think of the markets as an ATM machine. Think of the markets as a long-term wealth generator, but in the short term, anything can happen. Take care for now. I'll see you soon.